What's going on, everybody? Welcome to today's video. I wanted to get on here real quick and just give a quick update on the overall state of the market because we saw some very interesting price action today and felt like a video was definitely needed here to explain some things I'm seeing. A couple key things to look out for. Guys, real quick, this video is basically going to be taking a short to medium term outlook here for the S&P. Honestly, leaning more towards a short term outlook. As we know, long term is very hard to predict. I have been wrong about this market so many times, but let's just talk about what the recent price action could indicate and some key things to look out for. So guys, starting off here with this chart, I have a very simple Fibonacci sequence. We're using the 0 as the 2022 low, as it was just obviously the strongest support. Price would go on to recover almost 100% in the market from that point. And then for our one level, we were using the 564, which showed a major resistance for a couple months there. So based on this, guys, what I want to point out is that obviously you have the second leg up here at 697. But before that, guys, we have not seen any very good retest. Now, starting off, guys, what I want to do is I want to draw the short-term trend line on this name. We're going to be using this August low and be looking at it something like this. Now, a lot of investors are going to be watching this trend line. This is a daily, guys. This is encompassing about 4 months worth of data. Couple key things to point out is that we have broken through this trend line. A lot of people, there is technically two ways to play a break of a trend line. You can either buy into the break of the trend line and just kind of hope you have a liquidity move, which is kind of my preferred movement, especially on a price trading above a 200-day SMA. Or alternatively, it can break down and fell further, or it can break down, retest, and then cut back down. So you have a couple of different ways this could go. Now, the first key thing I'm looking at is this fair value gap. A fair value gap, guys, is any 3-candle sequence where the top of one candle and the bottom of another candle have quite a bit of room. As we can see, this happened on November 5th through November 7th, when price would go from 577 all the way up to about 592 on it just went up. I mean, it just cracked through this volume and just went straight up. So typically with the fair value gap, you want to see this gap being filled. So in my opinion here, what we can expect is to see the 576 level come into play right around 575. Now, guys, how I'm looking to play this is I would look to buy in at the bottom of this area down here. However, if we do see that break below that fair value gap, I am going to be getting out just as a precaution of what is to come. Obviously, I have a long-term position in SPY, as everybody should, and I will hold that forever. But this is for my short-term traders and options traders out there that just wanted a bit more information. So what we're seeing, guys, is, like I said, I do expect we could potentially get a pushback to topic trend line before ultimately retesting that fair value gap at 576. That is where I do believe we are coming to. Now, if this area holds, this will set us up for a nice move higher. If this area breaks, though, guys, I do suspect that we could potentially run down to about 550 at the 200-day SMA, where price will once again consolidate for a bit before figuring out what it's going to do. Now, guys, the reason for all this going down the way it did was because of concerns that the interest rates might not go down anytime soon. I believe they said they were looking at doing 2 more rate cuts, but, like I said, there are concerns that they might not go down anytime soon. So you can see the NASDAQ fell 3.6%. Guys, this was a nasty day. When we even look at this candle, I mean, this candle is taking out all the gains essentially since November 20th. A month worth of gains have been destroyed in one day. That's how the market works, and that's why it's scary. But guys, if anything we can ever learn is you can see these days have repeated, and ultimately after these cycle lows, we end up cycling higher. A lot of the major concerns, guys, you just can't really give too much thought to, in my opinion, because oftentimes, when a trend is strong, it's strong for a reason, and I just look to keep buying into the trend. Now, one thing though that is concerning, guys, I want to pull up is our S&P 500's PE ratio, because it's not something a lot of people like to, people don't bring it up enough, in my opinion. I think it's one of the most important indicators. This is looking at +1 and -1 standard deviations, with 24.6 being the mean S&P 500 ratio. As you guys can see, this is looking from 2016 all the way up to 2024. Now, we are at an extreme high up here. I wish I had a little horizontal line I could use, but I don't have it. But as you guys can see, we are extended out past the standard deviation of the mean. It's a big, a little bit of a red flag, as the S&P is riding a little hot, which indicates that a pullback is imminent. Now, we did see the PE soar past this up in 2020 to like 2021 when it reached its all-time highs. That's when like GameStop was popping off and all those other, like Palantir was cruising. All the kind of like meme names back then were riding high. But yeah, guys, I believe if I would best say this is I would say experience some shakiness. I don't believe we're going to see that new all-time high come in for a little bit now. You might be looking at a couple months for this number to come back in up here at 608, just given this candle. So guys, I am looking for more downward price action here in the next couple days, potentially down to this area, potentially a little break down to like 570. But you have to watch how the candles close too, guys. And that's why it's important to stay up to date with this stuff every day, because how a candle closes is everything. Like if it just wicks down and comes back up, it can mean something completely different versus a close below a certain level. So I'm rambling a little bit. But also, guys, please note this downward move was on a ton of volume. Now, this happens all the time whenever, Jerome Powell speaks. But guys, please be concerned. Watch the 576 level to hold. Go. I would potentially consider a position at this point, watching for a break below before exiting out. If you are looking short, I'm looking for that 575 break, and then all the way until 550 is where I believe we could go. So, guys, I just want to get on here, make that quick video, give you guys a quick update on where we could be going, / where we're standing, and what to expect moving forward. Guys, if you guys want to check out my Patreon, link is in the bio. I plan to get more active on that here very, very shortly. I just started up this YouTube page. I had a TikTok page where I did all this stuff all the time. I'm not using that page anymore. There's a lot of concerns around TikTok being banned, so I'm really trying to push the YouTube. I'm going to figure out ways I can edit this and make these a little bit more friendly for you guys. But this is just a start. I just want to get content out there, so that's where we're at. So if you guys learned anything new to all this video, please hit the like button. Feel free to comment your thoughts down below on what you think could happen. And yeah, guys, that being said, let me know what you want to see in the next one, and we will see you guys in the following video.